reliance on confessions cap the crackdown on insider trading. The promise was that the vast Gorgon gas project would deliver a tax bonanza for Australia, with billions for hospitals and schools. Now there are fears that there could be very little revenue thanks to a controversial scheme devised by the US resources giant Chevron. Chevron's latest accounts show that it's added $7 billion to a loan facility that critics say is a tax dodge designed to sidestep the Australian government's latest attempts to crack down on multinational tax avoidance. Stephen Long's been investigating.
The vast natural gas reserves in Australia's northwest will make Chevron tens of billions of dollars. But the giant multinational is piping profits offshore.
In Chevron, we have the godfather of Australian tax minimisation and, dare I say it, tax avoidance.
Labelled Australia's worst tax avoider by members of a Senate inquiry, Chevron has now upped the ante, adding $7 billion to a related party transaction that could deny Australia huge sums of tax revenue.
It really shows continuing contempt for the Australian government and for the Australian people. This is clearly a tax scheme to avoid payments once profits start to flow on the Gorgon project and the Wheatstone project.
Here's how the scheme works. On paper, Chevron's local subsidiary borrows big money from a shell company registered in Delaware, $7 billion last year, bringing the total loan to $42 billion. The interest charged on that loan were $2.2 billion this year, but the debt's not being repaid. Chevron is running it up to offset against the Australian tax bill on future profits from our gas reserves.
It does, in my opinion, look like further tax dodging by Chevron, loading itself up with debt from the US tax haven of Delaware in order to dodge paying taxes here in Australia.
Chevron is an extensive user of tax havens all around the world. They have more than 200 companies incorporated in Bermuda alone.
Jason Ward has been researching Chevron's tax affairs for years for an international union body.
Chevron has admitted that as much as $15 billion could be lost from this tax scheme, but now that there's an additional $7 billion on that loan, the ultimate loss to tax revenue in Australia is probably significantly higher than that.
Chevron has issued $2.9 billion in extra shares to its US parent, an attempt to comply with new rules announced in the May budget, designed to stop multinationals loading up subsidiaries with debt to minimise tax. But that's dwarfed by the additional $7 billion in debt from the new loan. The federal court overturned a similar Chevron scheme last year, a case Chevron is appealing, and the Australian Tax Office is auditing its current arrangement.
When large multinational companies get away with tax dodging, if that's what they're doing, then it really hurts the rest of us in the community. It means less money for things we want, like schools and universities, and basically these companies are not contributing then to our society.
Chevron maintains it's purely a loan for construction and complies with all laws.
The corporate watchdog is